Hi, I'm Dennis Coleman from Accountants Desktop. This video will demonstrate our CGT Small Business Concessions Calculator, which is designed to help you determine your client's eligibility to claim the concessions and to work out the net capital gain. If you like this video, please give it the thumbs up below. And don't miss any of our future videos by clicking on the subscribe button. The workbook is presented in Q&A style so that your client's eligibility for the various concessions can be tested with simple yes or no answers. It calculates aggregate turnover and net asset values. It identifies CGT concession stakeholders, and it runs tests for significant individuals and the 90% rule. And finally, it will calculate the gain and allow you to set your own order for claiming the concessions to maximise the tax benefits in your client's particular situation. I'll start with a brief tour of the workbook and then finish off with a live example. When you first open this workbook, you'll be taken to the settings sheet where you will enter information about the client and the CGT event, as well as relevant amounts for aggregated turnover and net asset values of the client, affiliates and connected entities. Below that, you enter details of the CGT concession stakeholders and the relevant interest in the entity which has triggered the capital gain. In addition, where the asset is a share in a company or an interest in a trust, you enter the amount of the entity's interest under About the CGT event, and each stakeholder's indirect interest will be calculated in the CGT concession stakeholders table. The status of each stakeholder as either a significant individual or spouse of a significant individual will be displayed in the table. Below that, the worksheet will determine if the client has satisfied the significant individual test and the 90% test, where the asset is a share in a company or an interest in a trust. Also on this settings sheet under instructions is a flowchart with guidance on how to use the calculator. And on the far right hand side of the sheet you will see links to the ATO website with information about the large number of definitions and tests related to these concessions. Before the client can claim any of the concessions, they will have to satisfy one of the 4 basic eligibility conditions. To answer questions in this workbook, enter 1 for yes, 0 for no, or leave empty where the question does not apply. A green tick or red cross will be displayed as appropriate. Most of the questions in our workbook are grouped in sections, and the status of each group as a pass or a fail will be shown prominently at the bottom of the group. In addition, each question and or group will clearly indicate if it is compulsory or an optional scenario. You will find that some sections or groups are greyed out because they do not apply to your particular client's situation. For example, you will see that the question in relation to changes to partnership rights or interest is greyed out because I haven't selected this asset type at the settings sheet. This sheet also has a small number of questions in relation to the active assets test. I'll show how this test works when I do a live example. And finally, at the bottom of each block, you can see whether the client meets the basic eligibility conditions. After passing the basic eligibility and active assets tests, you then move on to the 15-year exemption first to see if the client is eligible for this concession. If yes, you go no further because the entire capital gain will be exempt. This worksheet has a handy table into which you can enter the names of significant individuals and their respective percentages to determine if the client had a significant individual for at least 15 years. If the client is unable to claim the 15-year exemption, you then move on to the retirement exemption and answer all questions relevant to your client's situation. And finally, if the client satisfied the basic eligibility conditions, they'll be entitled to claim the small business rollover for the CGT asset. This sheet will calculate the required time frame for replacing the asset sold. You're now in a position to calculate the gain at the calculation sheet. The acquisition costs and sale proceeds will be populated from the setting sheet. You can add any additional costs here and also show the amount of current and/or prior year capital losses. Note that if the client is eligible to claim the 15-year exemption, you do not have to use any capital losses before applying the exemption. You'll now select the order in which to claim the remaining 3 concessions if eligible. Select a concession from the drop-down list, and the worksheet will indicate if that particular concession is available, and if yes, include an amount in the calculation. You'll need to take into account your client's particular situation to determine which order for claiming the concessions will give you the most favourable tax outcome. You'll see more information about the interaction between the 4 concessions on this sheet. And while calculating indirect interest or asset use as traced through various entities, use this handy tracing worksheet to determine the relevant percentage. So let's now have a look at a live example. We have a client called Operating Company Proprietary Limited, which is obviously client type as a company. The asset type is goodwill of the business. And I've entered the dates of acquisition and sale, and also the cost and proceeds of sale. Moving over to the aggregated turnover and net asset values table, I've entered the turnover at 1.5 million, market value of the assets 5.5 million, less liabilities 500,000, leaves net value 5 million. Going down to CGT concession stakeholders, we have Mum and Dad, Jane Smith and John Smith, and they each have 25% interest in the company, and their son Paul also has 25%, and daughter Debbie has 25%. So clearly each of the 4 individuals are significant individuals because they have at least 20% interest in the client. And below the table you can see we have a pass for the significant individual test. Going across to the basic eligibility sheet, there are 4 separate blocks here, and either of those 4 need to be satisfied. And we can satisfy the first test because the question is, was the client carrying on a business including winding up just before the CGT event? The answer to that is yes. Enter a 1. We have a tick and a pass, and we only need to satisfy one of those first 4 conditions. We then move on to the active asset test, and the question we have here is, was the asset owned by the client and used or held ready for use in or intangible asset connected with a business carried on by the client, affiliate or connected entity? Clearly the goodwill satisfies that test, so we enter 1 in that block. And the dates of acquisition and disposal have been carried across from the settings sheet. The asset has been owned for 8 years, and the number of years used in carrying on a business is also 8. So we satisfy the active asset test as well as the basic eligibility conditions. If we have a quick look at the 15-year exemption, obviously that doesn't apply because the asset hasn't been held for that period. We can then go to the retirement exemption, and there are 2 separate parts to this sheet, one in relation to individuals on the left-hand side and the other in relation to companies or trusts on the right-hand side. That's where we're going to focus. So the conditions here are Does the client satisfy the basic eligibility tests? And that's a yes, basically from the settings sheet. Also, does the client satisfy the significant individual test? Once again, that's been identified as a yes from the settings sheet. Did the client keep a written record of the amount chosen to disregard? And if there's more than one CGT concession stakeholder, each stakeholder's percentage of the exempt amount adds up to 100%. We're going to answer yes to that, and I'll show you where that information comes in. And in relation to payments, did the client make a payment to at least one CGT concession stakeholder? And was each payment based on the stakeholder's percentage of the exempt amount? And that'll be yes. Were the payments equal to the exempt amount or the amount of capital proceeds, whichever is less, will be yes. And if the proceeds were received in instalments, now you can see that it's an and if question. If it doesn't apply, then you leave it blank. Second last is also an and if question. If it's a J2, J5 or J6 event, it's not applicable, leave it blank. And the final question is also an and if question. Now this one does apply because we have CGT concession stakeholders who are under 55, being the son and daughter, and the condition here is that the payments for their share must be made to their super fund, and we'll enter 1 there. We then move on to the rollover sheet. So you can see, going back, we're eligible to claim the retirement exemption for this client. Moving on to the rollover sheet, the client is eligible for the rollover if they choose to do so. But you'll see when we go back to the settings sheet that there is no need to claim a rollover. But in this sheet, the rollover sheet will show you the replacement asset period, because there are conditions for rolling over a capital gain under the small business CGT concessions, and they are that you have to purchase a replacement asset within a certain period, and those periods are displayed on the screen. So going back to the settings sheet, we can see the net capital gain at the top of the sheet of $1.125 million, and we've decided in the calculation sheet to claim the retirement exemption. Now we have to, you can see a green warning there, where you have to claim or show a claim amount in the settings sheet for that to be transferred across to the calculation sheet. So going to the settings sheet, we would like to claim the full $500,000 for each of Jane and John. And in relation to the son and daughter, we would like to claim $62,500 each and pay that amount into their super fund. So that leaves a total of $1.125 million in retirement exemption claims, and that reduces the capital gain to zero. Going back to the calculation sheet, you can see now that we have a net capital gain of zero, and we've completed our examination of the client's eligibility and calculated the gain. Thank you for watching this video on our Small Business CGT Concessions calculator. Don't forget, if you liked the video, please give it the thumbs up below. And don't miss any of our future videos by clicking on the subscribe button also below. My details are shown on the screen, so please feel free to contact me for any further information.